What's up, traders? Here we go. GDP numbers have been released. Let the bull run begin. Let's go ahead and jump right on into this. Okay, first thing I want to show you. Let's see here. Economic numbers. GDP 2.6, forecast was 2.5, so higher than expected. So, it is what it is. I think it has something else to do with the midterm elections coming up, but whatever. It's higher than expected. That's what's going to send the markets going up. Now look at also durable goods, 0.4 compared to forecast of 0.2. You know, so a lot of good news. Also, initial jobless claims. I'm sorry, continuing jobless claims, 1438 compared to 1362 or 1388, which is higher. That's actually good for the Fed because people want ironically, if you've been following the economy, the Fed actually wants unemployment to go up. So they want jobless claims to go up. So that would indicate or suggest the Fed may ease off on the interest rate hikes. And that's always good for the markets, right? Okay, so having said that, let's now let me show you real quickly the 5-minute chart of futures. Okay, okay. Again, love drawing lines, love drawing lines. This was intraday low of MACD yesterday in the middle of the day, right? Look at the higher low, right? It came up. This is the NASDAQ 5-minute chart. Came up, comes down to consolidate, and at a higher low here and here. There are no coincidences, guys. The market was preparing for a good number because now look what's happening. Kaboom, straight up. Okay? The market already knows what's coming. That's what I think, right? Let's go and zoom out to the 1 hour time frame. Let me clear that drawing. Okay, let's look at this low compared to that low, right? Higher lows. Again, this is the 1 hour, by the way, the 1 hour time frame. And let me even clear that drawing. I will even choose this one compared to that one. When I zoom out, oh, oops, get out of there. When I zoom out, then you could start to see that is a higher low. See that? Look at the angle of the line going down. This is on the 1 hour. This point, this data point right here, that was last Friday when it surged. So basically it surged up, the MACD surged up, retraced almost completely 100% back down, and now it's going to surge up again. Okay, so basically it took almost a week to retrace, and all the while it's um, it's 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 flattening out. Well, actually, it's kind of a slightly increasing incline on the consolidation pattern up of futures above up top here. Okay, so higher highs, sorry, higher lows on both the 5-minute and the 1 hour. As you see here, that's not an accident. The market was preparing for this move that's going to happen. Let's get into, okay, TQQQ. All right. This is when the this surge upward right here is the 1 minute. This is the real time chart that you're looking at right now, not a screenshot. And as you see here, again, I think it was already preparing for that. It was already getting ready for it, right? Anytime you have a surge up, it's always preceded by downward, bullish, right? A bullish wedge or a bullish channel, or a bullish whatever you want to call it, bullish divergence. So um, now let's focus on the 5-minute chart. As soon as the number GDP number came out, boom, immediately it starts straddling the 5-minute EMA. So in my previous uh, videos, I talk about straddling is not a good sign, but in this case, it's okay because it's in a battle with VIX, right? The volatility, and I'll show you the VIX pattern, UVXY in a minute. So when GDPs or CPI or um, what any or when the Fed when Chairman Powell speaks, you're going to see this really choppy battle when you look at the VIX at the same time. So, but the fact that in this case, though, because it's expected to be just crazy choppy, it's actually good that it's straddling the line because I'm going to show you VIX in a second. It didn't straddle the line, it went down. Okay, so um, this is good. It straddled the line, but as I've also said in previous videos, it closed a big green candle, the body above this red line. That's a good sign. See, right now it is trying to backtest. You see that right now, real time. You see the red candle trying to backtest. But notice the wick is not even touching the red line. That's good. I'm going to, in this situation, see, we're about 15 minutes away from opening bell. This is going to continue up. VIX is not going to win this. Okay, so it's going to continue up. So it's my recommendation that at opening bell, you might wait at opening bell. You might try to see another, pullback attempt. In other words, VIX is going to try to surge one more time, but wait for the dip and then go long. This is the time to go long. Um, as you see here, well, okay, so it's yes, it's the reason. Here's the black line. It's bumping up against resistance, but the fact that it's holding serve so far, the back test is holding serve on this 5 EMA line, 50 EMA 50, sorry, on the 5-minute chart. The fact that it's holding serve, I think it is going to bust through um, this support, what it's resistance now, right here. It's kind of hard to see, but I can't zoom in. But on the 30-minute right here, you can see it. It's really trying to butt up against it. On the 65, it's coming up against it. But I think it's gonna crush it. Now, let's jump over to VIX, and then I'll just conclude with that. All right. See, okay, this is classic. In a couple of videos ago, I mentioned that on the 30-minute, well, actually, and 65-minute, but especially the 30-minute time frame, this is UVXY. VIX cannot overtake um, the SMA 20. See that? Keeps coming up against it on the 30-minute. Against it, fail. Resistance, fail. Resistance, fail. Okay? So, especially now that the positive GDP, I think it's going to fail. It's going to keep going down. Um, when I look at the MACD right here on the 65-minute time frame over here to the far right, see that? It's just so far below zero right now, and it's just flattening out. So it just doesn't have the momentum needed. Okay, so let's go back to the 5-minute right here quickly, and I'll end the video. This is when the GDP number came out, straight down, but in classic fashion, back test up against the five. This is the 5-minute against the EMA 50 and failed. Okay, that's classic. Look at that. It just came back up, failed against it, and it's going down. Okay, so um, those principles of the 5-minute candles, the bodies of the candles, holding true yet again. So today's going to be a day to go long, guys. So if you're day trading, just kind of you know keep your keep your stops tight. Um, but I think it's going to be a pretty big up day. So unless something materially changes, some unexpected news or something, VIX just doesn't have the momentum to come back and destroy the markets and crash the markets, at least today. I can't speak for tomorrow, but as you guys know, what is it? Apple and there's another big one, Amazon. releasing earnings this evening after hours. Okay, that's all I've got for you. Talk to you again soon.